In today's uncertain world, having a reliable financial safety net is more important than ever. The power of regular savings cannot be underestimated when it comes to providing financial peace of mind. Whether it's unexpected medical bills, car repairs, or sudden job loss, having an emergency fund can be a game changer in helping you navigate through life's unexpected challenges. By consistently setting aside a portion of your income, you can gradually build up a cushion that can serve as a financial safety net when you need it the most. Not only does having an emergency fund give you peace of mind, but it also empowers you to face emergencies with confidence, knowing that you have the resources to handle unexpected setbacks. The importance of having an emergency fund. Having an emergency fund is crucial because it provides you with a financial buffer during times of crises. It acts as a safety net, ensuring that you have enough money to cover unforeseen expenses without resorting to high-interest loans or credit card debt. One of the key benefits of having an emergency fund is that it prevents financial emergencies from derailing your long-term financial goals. Without an emergency fund, a sudden expense can force you to dip into your savings or even worse, go into debt. This can set you back significantly in achieving your financial milestones, such as buying a house, starting a business, or saving for retirement. Furthermore, having an emergency fund can provide a sense of security and peace of mind. Knowing that you have a financial cushion to fall back on in times of crisis can help reduce stress and anxiety, allowing you to focus on finding solutions rather than worrying about how to cover unexpected expenses. Benefits of regular savings. Saving regularly offers a multitude of benefits beyond emergency preparedness. It forms the foundation for financial freedom and allows you to pursue your long-term goals. Firstly, regular savings enables you to take advantage of compounding interest. When you consistently contribute to your savings, the interest earned on your money also earns interest over time. This compounding effect can significantly boost your savings and help you reach your goals faster. Secondly, regular savings helps develop discipline and financial responsibility. By making saving a habit, you become more conscious of your spending and develop a mindset that prioritizes long-term financial stability over short-term gratification. This discipline can spill over into other areas of your financial life, such as budgeting and investing. Lastly, regular savings provides a sense of control and empowerment over your finances. Instead of living paycheck to paycheck or relying on credit to cover unexpected expenses, you have the peace of mind that comes with knowing you have a financial safety net. This sense of control allows you to face life's uncertainties with confidence and make informed decisions about your financial future. How to determine your emergency fund target. Determining your emergency fund target is an essential step in building a robust financial safety net. While there is no one-size-fits-all answer, a general guideline is to aim for 3 to 6 months' worth of living expenses. Start by calculating your average monthly expenses, including rent or mortgage payments, utilities, groceries, transportation, and any other essential bills. Multiply this amount by the number of months you want to cover in your emergency fund. For example, if your monthly expenses total $2,000 and you want to have 6 months' worth of living expenses saved, your target would be $12,000. It's important to customize this target based on your individual circumstances. Factors such as job security, health conditions, and the stability of your income should be taken into account. If you have dependents or a higher risk of unexpected expenses, you may want to aim for a higher amount. Strategies for saving regularly. Saving regularly requires discipline and commitment. Here are some strategies to help you stay on track. Set a savings goal. Having a specific savings goal can provide motivation and clarity. Whether it's saving a certain amount each month or reaching a target amount by a specific date, having a goal helps you stay focused and committed. Create a budget. A budget is a powerful tool for managing your finances and identifying areas where you can cut expenses. By tracking your income and expenses, you can identify areas where you can save money and allocate more towards your emergency fund. Pay yourself first. Treat your savings as a monthly bill that must be paid. Set up an automatic transfer from your checking account to your savings account on payday. This way, you prioritize saving before spending, ensuring that you consistently contribute to your emergency fund. Start small and increase gradually. If saving a significant amount each month feels overwhelming, start with a smaller goal and gradually increase it over time. The key is to establish the habit of saving regularly, even if the amount is initially small. Reduce unnecessary expenses. Take a close look at your monthly expenses and identify areas where you can cut back. This could include eating out less frequently, canceling unused subscriptions, or finding cheaper alternatives for everyday expenses. Small savings can add up over time and contribute to your emergency fund. Automating your savings. Automating your savings is a powerful tool to help you stay consistent and remove the temptation to spend the money elsewhere. Here's how you can automate your savings. Direct deposit. If your employer offers direct deposit, set up a designated portion of your paycheck to be automatically deposited into your savings account. This way, the money goes straight into your emergency fund without you having to take any action. Automatic transfers. If direct deposit is not an option, set up automatic transfers from your checking account to your savings account. Schedule these transfers to occur on payday or shortly after to ensure that saving becomes a regular and automatic habit. Roundup apps. Many banks and financial institutions offer roundup apps that automatically round up your purchases to the nearest dollar and transfer the difference into your savings account. This simple technique can add up over time and help you save without even noticing. Tips for cutting expenses and increasing savings. Cutting expenses is an effective way to free up more money for your emergency fund. Here are some tips to help you reduce your monthly expenses and increase your savings. Track your spending. Start by tracking your expenses for a month to identify areas where you can cut back. Use budgeting apps or simply keep a record of your expenses in a notebook or spreadsheet. Review your bills. Take a close look at your recurring bills, such as utilities, internet, and insurance. Shop around for better deals and consider switching providers if you can find a more cost-effective option. Cook at home. Eating out can quickly add up and drain your finances. Try cooking meals at home more often and pack your lunch for work. Not only will this save you money, but it can also be a healthier option. Cancel unnecessary subscriptions. Review your subscriptions and memberships to see if there are any that you no longer use or need. Canceling these can free up extra money that can be directed towards your emergency fund. Negotiate bills and expenses. Don't be afraid to negotiate with service providers to get better rates or discounts. You may be surprised at how many companies are willing to work with you to keep your business. Where to keep your emergency fund. Keeping your emergency fund in the right place is crucial to ensure that it remains easily accessible while still earning some interest. Here are some options to consider. High-yield savings account. A high-yield savings account offers a higher interest rate compared to a regular savings account. It allows your emergency fund to grow over time while still being readily available when you need it. Money market account. Money market accounts are similar to savings accounts but often offer higher interest rates. They typically have a higher minimum balance requirement, but they also provide better returns on your savings. Certificates of deposit, CDs. CDs offer a fixed interest rate for a specified period of time. While they may not provide immediate access to your funds, they can offer higher interest rates than regular savings accounts. Consider staggering CDs with different maturity dates to ensure some funds are always accessible. Online savings accounts. Online savings accounts often have higher interest rates than traditional brick-and-mortar banks. They provide the convenience of online banking while still offering competitive interest rates. When choosing where to keep your emergency fund, consider the accessibility, interest rates, fees, and any potential penalties for early withdrawal. It's important to strike a balance between accessibility and earning some interest on your savings. How to handle unexpected expenses without depleting your emergency fund. While having an emergency fund is crucial, it's also important to use it wisely and avoid depleting it for non-emergency expenses. Here are some strategies for handling unexpected expenses without draining your emergency fund. Prioritize expenses. When faced with unexpected expenses, prioritize them based on urgency and importance. Separate true emergencies from non-essential expenses and allocate funds accordingly. Explore alternative financing options. If the unexpected expense is significant and exceeds your emergency fund, consider alternative financing options such as low-interest personal loans or a home equity line of credit. However, be cautious when taking on additional debt and ensure that you can comfortably afford the repayments. Negotiate payment plans. If you're facing medical bills or other large expenses, reach out to the service provider and inquire about payment plans or discounts. Many providers are willing to work with you to set up manageable payment arrangements. Consider insurance coverage. Review your insurance policies to ensure that you have adequate coverage for potential emergencies. This includes health insurance, car insurance, home insurance, and any other relevant policies. Having the right insurance can protect you from unexpected financial burdens. Monitoring and adjusting your savings plan. Building an emergency fund and saving regularly is an ongoing process. It's important to monitor and adjust your savings plan as your circumstances change. Here are some tips for staying on top of your savings. Regularly review your budget. Review your budget periodically to ensure that it still aligns with your financial goals and priorities. Adjust your savings goals and allocations as necessary to reflect any changes in income, expenses, or financial priorities. Track your progress. Regularly monitor the growth of your emergency fund to see how close you are to reaching your target. Celebrate milestones along the way to stay motivated and reinforce the habit of saving regularly. Reassess your emergency fund target. As your financial situation evolves, reassess your emergency fund target. If you experience a significant increase in expenses or a decrease in income, you may need to adjust your target to ensure adequate coverage. Seek professional advice. If you're unsure about the best saving strategies or need guidance on your financial situation, consider consulting with a financial advisor. They can provide personalized advice based on your specific needs and goals. Conclusion: achieving financial peace of mind through regular savings. Regular savings, particularly through the creation of an emergency fund, is a powerful tool for achieving financial peace of mind. It provides a safety net during times of crisis, prevents setbacks in achieving long-term financial goals, and empowers you to face unexpected expenses with confidence. By adopting strategies such as setting savings goals, automating your savings, and cutting unnecessary expenses, you can build a robust emergency fund and develop disciplined saving habits. Monitor and adjust your savings plan as needed, and remember to prioritize your emergency fund while handling unexpected expenses. The power of regular savings goes beyond emergency preparedness. It lays the foundation for financial freedom and allows you to pursue your dreams and aspirations. With a solid financial safety net in place, you can navigate through life's uncertainties with confidence, knowing that you have the resources to handle whatever comes your way. Start saving regularly today and take control of your financial future.